What is going on? What is going on, my people? Welcome back to another lesson. In today's lesson, we're going to discuss why a lot of smart money traders get stopped out. Okay, a lot of people are really starting to get into smart money lately, and the whole industry is kind of shifting and people are looking at it from a lot of different perspectives. But I'm going to keep it short, sweet, simple, and get straight to the point. Why do a lot of people get stopped out on the lower time frames? Now, really quickly before I start, I just want to invite you guys to join our Discord server down in the description down below. Okay, so join our free Discord server. As well as that, guys, if you are interested in getting access to any of our tradings, etc., we actually are running an offer with MomoFX. So if you sign up with them, deposit $500 and just trade with them, you can get access to our massive package costing 500 euros, okay, with a value of 500 euros completely for free. Okay, so the key here to why a lot of people are usually getting stopped out is because they're very one single time frame based traders, okay, which is something that is wrong. Okay, and a lot of people, a lot of educators, they'll tell you to perform a top-down analysis. And how do you perform a top-down analysis? This is something that's not very clear, and a lot of people approach it from many different perspectives. And I'm going to show you guys how I would perform a top-down analysis, and in turn, by looking out, okay, for a few things, okay, basically it's a small checklist that I would have for my top-down analysis that will in turn affect whether this trade is going to work out or not, or am I going to be in suddenly a tiny bit of profit and then eventually getting stopped out. So it's very important, and a lot of this boils down to be able to understand in being able to understand where you should take your take profit. Okay, it's a very important thing. There's so much to cover in something like this. In fact, I probably have 10 different points that I can explain, from market structure all the way boiled down to looking at order flow of a candle. There's many different ways to look at this, but for me, I'm simply just going to look at it from a structural perspective on the higher time frame and how to perform a top-down analysis to avoid getting into those losing trades. That's not to say that you're going to avoid all losing trades. Okay, losses are definitely happening, okay, 101% happening, but you'll be able to really decrease them. So we take a look right here, and I want to take a look at the structure that's occurring on NU at the moment. Actually, before I actually take a look at the market structure, let's just do it from the perspective of how a lot of people do it. So let me see. Let's go to the 15-minute time frame. This is a decent enough time frame, and what we're going to do is we're going to use the replay tool. I'm not going to look at anything really in hindsight. We're just going to look at it from people's perspective. What we're going to look at. So I have NU on the 15-minute time frame right now. Okay, pair that a lot of people trade. Market structure wise on the 15-minute time frame, very clear. Okay, it's to the upside. You can kind of draw this channel, whatever you want to call it. I'm just using this as a guideline. The structure is to the upside right now. Okay, we look at it from a supply and demand or a SMC perspective. We see that we have reacted from this demand right here, this institutional candle. We filled in the imbalances, and we had C, okay, and then we had the M, and we eventually had T. What does this mean? Consolidation, manipulation, trend. As I said, this is something that I will never ever discuss on my YouTube lives, because I do believe I provide a lot of value as is already. So I would prefer if I keep some things specifically for the mentorship. Okay, it is an extra added confirmation, and this is CMT, as you guys can see right here. So anyone that kind of knows, anyways, this is it. This doesn't matter though for here. And now what we can eventually see, okay, is this very strong bullish price action to the upside, and we see this break structure. So now what am I looking for? Think about it. What's my next step? What's my next position that I'm going to be looking for in the market? Well, since I've been basically buying all of these potential institutional candles to the upside, okay, we look at previous and we look at all these down candles before the last move. We're looking to basically buy all these moves right here. What's my next position going to be? It's going to be this institutional candle right here. So I'm going to be looking at this last down candle before the up move. I have the imbalances right above it. Okay, blah de blah. We have the confirmations that we want to look for, and we want to look for the buys on the higher time frame. Okay, so that's what I want to look for. So we let price do its thing. And price is approaching. This is when I'm getting excited. I grab my fib. I can clearly see that the high has been made, and it's lining up with 886. This is a nice setup that I should look into, because look, the structure's up. This is why I should be looking for buys. It taps in, boom. Beautiful reaction. Okay, we're getting a beautiful reaction, bullish engulfing candle. Whoa, this whole trend we got no bullish engulfing candles. But as we tap into the institutional candle, we get a bullish engulfing candle. So this definitely means that it's gonna start going up now. And okay, I missed this one, so what can I do? I can get into snare and bone setup, and this is where I get into my snare and button setup. Oh, what's the price do? Consolidate around here a tiny bit, potentially showing like, oh, we're potentially accumulating around this area, and this is when it's going to go up. Bear in mind, I'm not even actually looking at this from a retail perspective at all. I'm looking at it from a smart money trader perspective. Okay, this is what they're looking for. They see the consolidation. We're not going to talk about sports. We're going to talk about a white coffee and accumulation right here. And boom, the low gets breached. So their stop loss is basically cleared. Okay, what did they do wrong? They didn't perform a higher time frame analysis. They didn't notice how the higher time frame candles closed here. So let's go and look at the higher time frame. What can we see? 1 hour doesn't tell me much. The 4 hour is probably the one that kind of tells me the most right here. So this is a tiny bit more advanced, so really kind of tune into what I'm saying here. And if you don't understand it, guys, go over it again, because this is so important, and this is actually value, like this is crazy value right now. So just make sure you're tuned in and listening up. We understand from a structured point of view, okay, on a hard time frame structure, we see that this is the 4 hour trend. This is the trend, and this is the microstructure within. This is the pullback. Anything below the seller's zone, okay, this is basically my sellers. This is the area where my sellers took control. This is my supply. Anything below right here, okay, is where I'm going to be looking for sells basically. Now, if we break above this wick right here, then I'm going to be looking for buys, because that's my structural point right here. This is my structural swing, and I can clearly see that we have breached that high. And if I get a full body close above it, then I can see that we have a structural shift to the upside, and I potentially could be looking for buys now. So that is what we would be looking for right here. Okay, as you approach right here, this is minor structure. These higher high, pull back the higher high, that pull back the higher high. It's minor structure. You have to understand that. Now, had the candle right here, this 4 hour candle closed above right here with a bullish, basically the candle closing above this wick, then that candle, okay, that setup on a 15-minute time frame for me would have been valid then. Would it have worked or not? Potentially, it could have still went either way, okay, but because that's what my system's telling me, okay, my system is telling me that that trade would have been high probability, so that's what I would have executed there. So the fact that we did not see that the candle closed above this high right here, this is why this trade didn't work out right here. What happened? Well, what basically happened was we had the liquidity above this high, and this high. Okay, get cleared. Okay, and even this high. So look at the liquidity above all these highs getting cleared. Okay, and we failed to break structure, and then we created very, very strong movements to the downside. Okay, so the bearish momentum started coming in. When we take a look at it from a 1 hour perspective, this is what we are seeing. We see that we've basically swiped up. The 1 hour is probably the best. We swiped up, we took the highs, all of these highs right here, and we ended up creating some strong bearish momentum to the downside. So by understanding, okay, and if you guys don't already understand, if you guys don't already know what I'm kind of speaking about, what we notice a lot of the time is that if liquidity on a hard time frame gets cleared, okay, we usually expect some sort of pullback to the downside. Vice versa, if we see liquidity to the downside get cleared, we see a pullback to the upside, okay, and then potentially the continuation might occur, okay, of that trend, or we might get a reversal. But every time you clear liquidity, you usually get some sort of reaction in the opposite direction. This is something you can backtest. So yeah, like, don't take my word for it. Okay, so this is something that you can backtest. So what we've seen right here, and the failure to break on a 4 hour, the failure to break with the body right here, this was a very, very significant confirmation for me that we potentially might not see this institutional candle work out. Okay, so the importance of seeing how my candles close. Okay, once again, what we have right here on the 6 hour time frame, have this bearish engulfing candle, okay, and this institutional candle clearing the highs right here and here. So even though, yes, we did get a full body close here, notice the minute we did that, notice the momentum to the downside that we got in this bearish engulfing right here. So what I have bought right here, seeing that this candle right here is creating a bearish engulfing. No. So it's very, very important to see how your structure closes. where price potentially have what point of interest it has potentially approached. Okay, how the candle close, how the structure it is at that certain time. Like we take a look right here, we have touched into this supply, and overall in the higher time frame, okay, we basically redistributed right here, we broke down, we came back up, and this is simply a pullback for a continuation to the downside. Okay, and this is all something that I can do, okay, by looking at the higher time frames and going through all the higher time frames and being able to analyze. But something as small as this, a lot of traders would have probably missed just by looking at here. Even though everything else potentially would have been correct in their analysis, the fact that they don't actually trade in the present, which a lot of people tend to forget. You must trade at that present candle. You must trade that present momentum. That's what's going to give you your profit. Okay, it doesn't matter what's happening to the left. You have to look and react to what is actually printing at the moment. Okay, so this is something that a lot of people would have missed out on. Okay, this is simply one confirmation from many that I explained, guys. I would probably most likely share a good few of them in on YouTube in the future, etc. And obviously a lot of them are always going to be in the mentorship if you guys are interested in that as well. But with that being said, guys, I appreciate every single one of you guys for watching this video through to the end. If you haven't already, make sure to drop a like and a subscribe. That would really mean a lot. And with that being said, I'll catch you guys on my next video.